I just wanted to welcome everybody from Iowa. We've got a lot of people that have been calling and emailing me asking about insurance and possibilities and things that might be of use to them. So I've invited a couple folks tonight to be with us and give us some information. Jeff Cook is going to open us up with some information of the United Methodist Insurance Program, and then Jeff Evans will bring us some specific information that we can use in various ways. So Jeff Cook, welcome to Iowa by way of Tennessee, I think, but it
Yes,
is good
sir.
to have you here.
Thank you. It's a pleasure to be here with you tonight. Quick word about the United Methodist Insurance Program. I'm president and CEO of the United Methodist Insurance Company. We are a ministry of the United Methodist Church. We have been in existence in one form or another since the 1970s. We're rooted in the Book of Discipline. A couple of years ago, we endorsed the Sovereign Insurance Group as our uh, brokerage partner, and Jeff Evans is with Sovereign. They have been insuring churches and nonprofits for over 60 years. They are available to any ministry of the United Methodist Church, and it's no surprise to anyone on the call how difficult this insurance market is. Jeff Evans is going to tell you a little bit about how we got here and give you some ideas of things you can do to help yourself in this market. Jeff?
Awesome. Thank you, sir. Thanks everyone for being here. We do appreciate it. I don't know, early before maybe many people got home, we are kind of all talking, and I promise not to go too long. I'm a little long-winded, but I know everyone doesn't want to hear 3 hours about insurance. But there is kind of a realization that there's 70 plus people on here because there is a real issue, and so I'm just going to talk real quickly, through what's happening in the insurance market. Is it really that bad? Breaking news to probably no one on this call. Yes, it is really that bad. So we'll go into a little bit of why and like Jeff said, how we got here. And then really, some of our recommendations and what you can be doing to try to mitigate some of the impact that we're seeing, really honestly on a daily basis all across the country. But Iowa, has certainly been hit about as hard as almost anywhere in the country right now. So to jump in, the current insurance marketplace, there's obviously quite a bit of challenges, lack of carrier profitability, right? These insurance companies exist, to make money for their shareholders. And, over the last few years, especially in the church space, that has not really been the case. And so that leads to constricted carrier appetite, which basically means that carriers are less likely to take on risk, which creates less leverage for brokers like us, less competition for churches like you, and puts all of us in a more difficult position. And the reason that we are here is because of industry-wide catastrophic property claims. We'll get into kind of some of the differences between property side versus the liability side, but the reality is the property is really driving, a large majority of, the types of renewals or non-renewals that you're seeing for your churches. And lastly, churches are not seen anymore as an ideal target market for the insurance companies due to the class of business, deferred maintenance on buildings, and increased property claims. And so, 5, 6, 7 years ago, there was, 7 to 10 carriers who were, jumping at the chance to insure churches, and had good programs and were willing to take on risks and understood that claims happened and, created competition in the marketplace, which is, good for everyone. And unfortunately, that's just not really the case anymore. And so some of the challenges, they're carrier specific, right? Is, each carrier has their own kind of strong suits and is facing their own challenges. But, Guide One, Church Mutual, and Brotherhood, right, are the big three in the church insurance space. And I'm sure of the people on this call, 85 to 90% of you either are insured by them currently or have been insured by them, in the past couple of years. And so just to give you an idea, right, I mean, these carriers insure most of the churches throughout the country, or a large portion of them. And this is all over the last 2 to 3 years. Guide One has retained its AM Best rating, but they have a negative outlook. Guide One needed a $200 million cash influx by a private equity firm just to maintain their AM Best rating and to not drop to a B plus. So right now they're an A. They do have a negative outlook. awaiting kind of the use of the capital, which again, all reports we've seen are that's positive, but for right now, they still do have a negative outlook. Church Mutual, the largest insurer of churches throughout the country, has also retained its A rating. They also have a negative outlook. Church Mutual operated at a 127% combined ratio last year. And so what that means is for every dollar that they took in for insurance premium, they paid out $1.27 in claims. And so when you start talking about hundreds of millions of dollars in premium, they lost a lot of money last year. It was a really rough year. And so they have a negative outlook. Again, everything we've heard is that's probably going to be moved up to stable in the coming months. But anytime you lose money like that, it puts a company in a tough spot and they have to kind of reevaluate what they're doing. And Brotherhood Mutual has a B++ rating with a stable outlook. But B++ rating means if you have any type of loan covenant on your building, right? Any type of loan with a bank, most require at least an A rating from your insurance carrier. So if you have a Brotherhood Mutual policy and the bank's paying attention, you could be out of compliance with your loan covenant. So all three of these carriers, right, they're major players. They have been, they will continue to be, but these are some of the, day-to-day challenges that they're facing and kind of the messages that are being conveyed to us when these large increases come across, these non-renewals come across, and some of the changes in coverage come across. And the real reason for all of this is just that their pricing was not keeping pace with costs, right? And so whether that be the cost of claims, cost of, rebuilding a building, cost of litigation, they just weren't increasing their pricing enough to keep up. So just a little bit more details kind of on some of that. The carriers aren't profitable. So, they're losing money, right? We use Church Mutual as the example. They're certainly not alone. Well, when you have underwriting losses, that reduces carriers' surplus, which reduces their capacity to take risk. I know that probably sounds foreign to some of you, but what that really means is, right, carriers have to keep a certain amount of surplus. It's a rainy day fund so that they can pay out their claims. And, ideally in a given year, you wouldn't go into your surplus if you can take in enough premium to pay out all the claims that come in a policy period. But if not, you have the surplus sitting here to help out and make sure that you stay financially stable and you can still pay claims and we can all continue to operate businesses like we do, every day. And so when that surplus is cut into, the carrier's capacity to take on new risk lowers. And so when you see carriers say, oh, we no longer can insure churches in the state, or we can no longer insure churches of a certain size, it's because their capacity to take on new risk is limited because they've lost money out of their surplus. Profitability has become more important than premium, which is a really new development over the last year or two, which sounds simple, but quite honestly, if you were a large church and you were paying $40,000, $50,000 a year for insurance, and you're getting a 10% increase, you'd go to the market and you'd get 3-4 quotes from carriers eager to save you 15-20% because all people cared about was premium, right? If you were paying a lot of premium, it was easy for carriers to say, we're growing, we just want to add the premium to our books. Well, now it's the total opposite. Carriers want to see exactly how you're going to be a profitable account. If they don't think that they can write your account and be profitable, they're just going to say no, regardless of size. We do a number of group programs at Sovereign. It's something Ron and I have talked about. And, in years past, it was, marketing a group program that's paying, millions of dollars in premium was easy. Everyone wanted to write millions of dollars in premium. It's something they can, wave a flag and say, hey, look at this big account we wrote, right? Shiny objects. But that's no longer the case unless carriers think they can do it in a profitable way. And so that's kind of driving some of the change that you're seeing as well. And how are they attempting to change all this, right? Because obviously you're seeing it day in, day out. We're seeing it day in, day out. So what are they actually doing to change this cycle? So they're increasing prices, right? Which is obvious. I think everyone on this call probably knows that. They're changing terms and conditions to transfer some of the risk back to you, right? Having some skin in the game, from an insurance company perspective is a good thing. You're in this as a partnership together. And so that can come in the form of higher deductibles on your property, wind hail deductibles that are separate from, your regular fire or water damage deductibles. And some carriers are even carving out specific coverages, right? If you go to a summer camp at a retreat center and they have ropes courses and zip lines, some carriers are just excluding that now. And, maybe you're not aware of it, but it's something that your broker should be talking to you about because carriers are looking to carve back some of the exposures where they've paid major claims. And lastly, they're shedding risk where they have concerns about the exposure. And so that's the non-renewals that you're seeing, right? I'm sure some of the people on this call, their churches have been non-renewed. And there's all kinds of different carriers doing it. They're doing it for different reasons. But again, when you talk about capacity to accept risk, by shedding some risk that they don't like, they have more capacity to take on risks that they do like. And so carriers are taking every opportunity to shed risk where they think they have concerns about the exposure. So the property, like I said, this is driving everything that we're seeing in the market today. Some of the major challenges is inflation, right? I mean, you see that every day. Increased costs of repairs and reconstruction, right? Materials, labor, that's all way up. We all kind of understand that, I think. But shifting population to areas with high risk of loss due to wind, hail, and storms, right? So think about all the people moving to Florida, California, Texas. Well, you're in Iowa, but you're still paying for the claims that happen in other parts of the country because most of these insurance companies operate, countrywide. So that's actually been a challenge for a lot of the carriers that we work with. Increased storm and wildfire activity, that's both in terms of frequency, but also severity, right? There's more storms than ever, but there's also more strong storms than ever. And there's wildfires. Obviously, we hear about them, a lot on the West Coast, but we have them, we're in Philadelphia and we have them here in the Northeast now too, apparently, because we had some in Northeastern Pennsylvania 2 weeks ago. So increased activity there. And winter storms over the last 5 years have contributed a ton to some of the problems that these carriers have had due to frozen pipe claims. We recently put out a newsletter just about winter preparedness, and Ron has shared it, I think, and can certainly provide a copy to anyone who's interested. But just to give some context to this, one of the carriers we work really closely with was 2022. Carrier was operating at a 96% combined ratio at the end of the year, and 96%. So you're looking at 4% profit, and you're talking hundreds of millions of dollars in premium. That's a big number. And that Christmas storm of 2022 rolled through the Northeast, and they paid out well over $100 million in just pipe burst claims in just the Northeast, and wiped out the entire profit in one storm. So that's something that carriers have seen an increase again in terms of the frequency, but also the severity of these types of storms and claims, obviously, that follow. So here's just a picture of the insurance market today and kind of the trends that we're seeing. Now, this is across every class of business in every state across the United States. But just to give you an idea, right? 6-7 years ago it was 5% or so renewal increase, right? Keeping pace with inflation. Carriers would bump it up a little bit depending on if you had claims or not, but it was relatively stable, and that pretty quickly jumped up to 10-15%, and then you start to see really a big spike in the middle to end of 2022. Obviously, it drastically jumped last year to 20-25% increases, and it is slowly coming back down, right? I don't think some of that has hit the church insurance market quite yet, right? Again, this is across all scopes of business all across the country, and so the church insurance market's a little bit behind, maybe like apartment insurance companies who see some of this a little bit ahead of time. So we are still in what we deem to be a hard market, which is carriers are taking large rate, but it's really been happening in other industries for the last 5 or so years. And while I don't think it's going to continue in perpetuity at 25%, I definitely don't think we see the light at the end of the tunnel quite yet. Just to put some numbers to some of what we're sharing here. So 67% global insured losses were recorded in the United States last year, and it was 75% in 2022. And that obviously makes sense, right? We have more risk. We have a lot of buildings. And we buy more insurance than other places across the country, right? But natural disasters are playing a big part in some of the carrier results that we're seeing and the lack of profitability. So last year, $80 billion in insured losses. That's 40% above the 21st century average, right? So this is way worse than any models were predicting that these carriers have. There were $28 billion loss events, which is the highest year we've ever had. And this year, it's looking like it's probably going to be another 28 to 30, obviously, depending on how the year ends. So again, it's not getting better yet. And severe convective storm outbreaks. What is a severe convective storm? It's basically just a really bad storm. And what insurance companies have started calling these storms is severe convective storms because they cause more damage than your average storm did 5 to 10 years ago. We are seeing them in, parts of the country like Iowa, where, the wind and hail claims are really doing tons of damage to not just roofs now, but buildings themselves. And so $58 billion was paid out last year due to these severe convective storms. So on the liability side, there's a couple of different factors that affect the cost, right? So social inflation is the first one we have, and probably asking, what is social inflation? No one probably knows what that means, and you shouldn't, because it's not a real term. It's an insurance company made up term, and it basically is used to describe the difference between regular inflation and what insurance companies are seeing in increased costs of verdicts, right? So if inflation in a given year is, let's say it's just 2%, and the average verdict is up 10% in that year, well, they're going to say the social inflation that year is 8%. That's another reason for them to justify giving you a larger premium increase. Carrier appetites are dwindling due to sexual abuse concerns, right? We obviously see that, all across the news, unfortunately, but there is a real concern there with statutes, and the Boy Scouts have obviously been a big talking point. So there's still concern there. Carriers are still offering the coverage, but maybe not as comfortably as they used to. One of the big problems right now is when the need arises to split out your property and liability coverage, there's not really enough premium on the liability side for carriers to want to provide a standalone option, right? So if you look at most of your insurance policies, we typically say your premium is driven 75 to 80% by property. With the increase in property insurance right now, it might even be 85 to 90%. But that liability charge is relatively small. And so when you have to go out and place your property separate, it can be hard sometimes to find a carrier who wants to offer a $2,000 liability policy and still continue to cover all of the things that we want to cover, right? Your pastoral counseling, general liability, your sexual abuse coverage, your board coverage. If you one slip and fall in your church and someone files a suit and the carrier settles for $20,000, your $2,000 premium for general liability insurance, they're never going to make that back. And so there is some hesitation on the carrier side to write liability by itself, even if on the whole, it's a little bit more profitable than the property has been. But when you do have the property with the liability, there's obviously much more premium there, which does help out from the insurance company side. And lastly, litigation costs are increasing, right? We just talked about it. Litigation funding may exceed $50 billion by 2036, according to Research Nester. Attorneys are using the web to hijack claims and file suit against carriers. I said I live in Philadelphia. I got off the airplane a week ago. I was driving down I-95, and it was just attorney billboard after attorney billboard after attorney billboard, and insurance companies are paying for that, and so that is driving some of the increase that we're seeing right now in liability. And the market, again, overall, it's better than the property, but it's certainly still not great. Same profitabilities do affect this line of coverage to a lesser extent. Inflation, medical inflation are putting a lot of pressure on rates. And just to, again, put some numbers behind some of the things that we're saying here. Nuclear verdicts, which we deem, 10 million or so plus, reached a 15-year high in 2023, is probably going to be right around the same number again this year. And, again, just last year, 27 thermonuclear verdicts, which is a new word in the insurance industry, which are verdicts that exceeded $100 million last year. So, I wanted to take just a quick minute to address, all of that is more of a broad brush, approach in terms of, what we're seeing in the market, what the church insurance companies are doing, but just some specific challenges related to your conference and your churches. And I thought it was helpful. I went through some of my, our company's interactions with our insurance companies on Iowa churches over the last, probably 3 to 4 months. And this is some of the feedback we've gotten with some declinations or, hey, we're pushing for a better rate. And this is some of the feedback that we've gotten. For years, we've been charging far too little in this state. We can't legally increase rates enough to stay profitable. Just to explain that a little bit, right? Carriers file rates in every state. And so it's approved by the insurance commissioner's office. So if carriers were charging far too little, let's say they deem they need to charge 40% more in order to profitably write insurance in Iowa, the insurance commissioner's office is never going to allow a carrier to file a 40% rate increase. They're going to make them do 5%, 6%, maybe 10% if they really push for it. And even then, the insurance company is going to say, well, we can't do it profitably. And so at that point, insurance companies start to just throw their hands up and say, well, then we're just not going take on new risk in the state, or we're not going to be in the state altogether. I think it's probably publicized a little bit more in California with some of the personal lines issues that are going on there, but it exists on the commercial side too. And it's one of the issues that some of the church insurers are having. New deductible structures are required in order to continue to offer coverage for churches, not just in Iowa, but all across the country. $1,000 deductibles used to be kind of the standard for smaller churches. No one's offering $1,000 anymore. Most people aren't even offering $2,500 anymore. They start at $5,000 and go up from there pretty quickly. Wind hail deductibles are being split out now. A lot of you probably have percentage wind hail deductibles as a percentage of the overall insured value that you have, right? So carriers are continuing to implement these measures to try to remain profitable and push some of that risk back onto you. And again, these are things your broker can work through with you in terms of how you'd be impacted by, a given situation. But these are things to just keep an eye on. Some carriers in Iowa are saying we can no longer insure churches of a certain size. They're too large, right? And this gets back to 4 or 5 years ago. The larger the church, the more markets available, the more carriers were falling all over each other to try to earn the business. And that's just not the case anymore. It's become more difficult almost to place the larger accounts because carriers don't have capacity to accept that new risk. And lastly, some carriers are no longer offering quotes on any new business in Iowa. And this is certainly not unique to Iowa. It's happened in California. It's happened in Texas. It's happened in Louisiana. It's happened in Florida. But Ron and I were talking when we met at the Treasurers Conference this year. My comment to him was kind of, well, Iowa was almost in a unique situation because a lot of those places, in Texas and Florida, California, we keep mentioning, they've gotten large rate increases over the years. And so, they've seen 20%, 30% increases, higher deductibles be implemented. It's been a more gradual approach from the carriers because they've noticed this, profitability issue in these states. And it seems like in Iowa, a lot of the carriers have been slow to react. And so, the church that's, got 50,000 square feet and is insured for $10 million of replacement costs was probably paying $15,000 at most for insurance a couple of years ago. And now if you try to find, replacement for that policy, it's going to double or triple because the carriers just hadn't simply been increasing, the deductible structure and the rate like they were in other places. So that's a little bit unique to Iowa. And we'll get into some of what you can do to potentially mitigate some of these impacts. But it is a real challenge that us and the insurance companies too are trying to work through right now. So after all that doom and gloom of what's going on in the market here, we're going to kind of walk through some of what we would recommend and some of the things that you can do to try to offset some of what we're seeing right now. So first, and this is really important, is just understand reality for what it is and not what we hope it to be, right? A lot of the people we work with, we try to prep them for what we think the outcome might be. And I understand that it's really difficult to understand that you're going to have, maybe a 50 or 100 or 200% increase in your insurance costs. But those are the realities that we're facing in the market right now. And so to try to prepare accordingly, upfront when you're budgeting and going into that process is something that, we would highly recommend. Pay your premiums to keep your coverage in place. If you take one thing away from this call, please, please, please pay your premiums and keep your coverage in place. A lapse in coverage is the worst possible thing that you could do from an insurance perspective right now. So please make sure that you are on time with your payments and be proactive. And that's just in anything you do insurance related, whether that's risk mitigation, documentation of policies and procedures, marketing your account and shopping to see if there's a better alternative. Be proactive because, those who are reactive to bad news, too late or down the road are going to be putting their church in a difficult position. And it's obviously a different world we've gone through, the many ways that it is. But just to kind of, explain that a little further, right? 5 years ago, if you were facing a non-renewal, the likelihood is you'd have multiple quotes from multiple carriers. We've kind of talked through some of that, but that's not the case anymore. Carriers facing non-renewals are often given one quote, maybe a couple indications that, are way out in left field and not realistic at all, just to kind of get the broker to go away. Whereas, in years past, it was competition and there was carriers, again, trying to do whatever they could to, earn your business, giving you 3-year rate guarantees, right? Your premium's not going to change for 3 years if you go with us. And that's just not the world that we live in today, unfortunately. again, value your current coverage. Even if it increases, it still might be the best available. And this is again specific to Iowa. A lot of what we're seeing is if you have, renewing coverage with one of the big church insurers, I know it's going up, but there's a good chance it might still be the best that's available. And again, that's why I kind of speak to just please make sure you stay on top of your premium payments because, the cancellation and trying to get reinstated is a different process than it used to be. And so it doesn't mean don't shop and don't talk to people and see if you can find something better. Please do that, especially if it's putting pressure on your budget. But just realize that, having insurance and having something that you can afford, even if it's, a 20, 30% increase, still might be the best outcome. And plan for the worst case scenario and hope and pray for the best. This is becoming kind of our common theme, as an organization. In a lot of our discussions with clients who are getting non-renewed is you have to understand what's out there, and the worst case scenario is possible at this point. So hope and pray for the best and rely on your broker and who you're working with to do a great job for you and communicate throughout that process. Just to hammer home one more time, do not let your coverage lapse. In years past, if you forgot to pay a month or two of premium, carriers wouldn't really hesitate to just reinstate your coverage. You'd sign a no loss letter saying, hey, we haven't had any claims while our coverage lapsed, and here's the payment for the last 2 months that we missed. We're really sorry. They'd say, no problem, your policy's back in force. And that's not the case anymore. Insurance companies are looking for a reason to non-renew your account and looking for a reason, again, to get off of risk that they're not comfortable with, to accept new risks that they're more comfortable with. So not paying your premium gives them a reason to do so. And so we constantly enforce with our clients, don't give them a reason to say no to you. And the reason we do that is because it's possible they only agreed to renew your coverage and not to write you new, right? And so when you cancel for a lapse in payment, the carriers are looking at you as a new risk then. They're not looking at the 20 years you've been with them or the 10 years you've been with them and developed a relationship and comply with their recommendations and paid claims, right? They're looking at you as a new client. Do you fit our risk portfolio? And do we have the capacity to take on this risk? And as we've gone through, a lot of the carriers are simply saying no at this point. So what we would recommend is start early. Right? If you're facing a non-renewal, we recommend starting 90 to 120 days in advance. And the reason we say that is if it's earlier than that, most insurers will simply decline to review and not provide you really any feedback. And most insurance companies at this point will not quote your account midterm. It's not to say all won't, but a lot of them will see if your renewal is January 1st and you try to have your broker market it, July 1st, their insurance companies are going to look at it and say, we have too much going on right now. Talk to us closer to January 1st and maybe we'll consider it. And so doing that does put your account not at risk, but it does put you in a less favorable position with the insurance companies. If it's too late on the other end, of course, they might not have the capacity to turn it around. Insurance companies are more inundated than ever with all of the changes in the marketplace. That's obviously, put a strain on their resources. And so if you're not giving them enough time on the other end, you might simply just not get a quote. And some shopping tips that we put together: prepare as much information as you can, building age, updates to the roofing, the wiring, plumbing, heating systems, documentation of that, your policies and procedures surrounding abuse. If you have a preschool, what is that? Is there a hold harmless agreement in place? What does all of that look like? So if you can prepare as much information as possible, it's going to save you, the broker, and the insurance company a lot of time on that back and forth. Explain large losses, steps taken to prevent reoccurrence. Right, claims happen. I mean, that's why I have a job. That's why Jeff and I are here. That doesn't mean you can't find insurance, but you do need to be able to provide detailed data that explains what happened. And if it's a slip and fall and there's a crack in the sidewalk, well, have you fixed the sidewalk? Can we get a receipt from the contractor who used to do it? Can we get updated pictures showing that the crack in the sidewalk's no longer there? It sounds silly, but something on your church's letterhead that's signed by the chairperson of the trustees or the executive pastor that says, hey, this is exactly what happened when we had a claim. Here's everything that we've done since then to prevent this from happening again. It goes a long way with the insurance companies because it shows that you care. And we always recommend that for our clients. Pick an agent that knows churches and can access many markets. This is not a sales pitch for us, but when you're doing shopping, pick an agent that can access multiple carriers. We get calls all the time from churches who said, "Hey, we talked to our local agent who's on the board who said he had a carrier or two who could help us." And it came down to 2 weeks before the renewal, and he wasn't able to find anything. And next thing you know, they're facing a non-renewal and no quotes 2 weeks out. And so we say work with a specialist because this market is difficult, and you're going to want someone who can get your church pushed to the top of the pile with the insurance companies. And be transparent, about your situation, right? Every situation is a little bit different. I always say to my clients, I am not a lawyer. I don't pretend to be a lawyer. I do not want to be a lawyer. But if you're working with a lawyer, you're gonna share everything with them. They can't help you if you're not going to tell them exactly what they need to know. And so with us, we feel the same way, right? If you keep your cards too close to the vest, you're not winning in the long run. If something happened, there's an incident a couple of years ago, it's an uncomfortable conversation. We need to know about it, right? The worst position for all of us to be put in is we put together, all the paperwork, we send it to the insurance company. We're, doing everything we can to present the church in the best light possible. It's a great church, great organization. They do a lot of good for everyone. And, the insurance company comes back and says, well, here's this article from like 4 or 5 years ago. How come you didn't mention that? And then we all look like, we're either trying to pull one over or we just didn't know and weren't doing our jobs. And so I think it's really important just kind of have that open communication, right? We're not going to do anything to put you, in a worse position. Our job is, again, to present you in the best light. So we do need to know, as much information as possible in terms of just the organization and the operations so that we can properly convey that to the insurance companies. And just a few more tips. So get as close to the GCFA recommendations as possible. I know Ron's shared those and Jeff's very well aware of those and is the one responsible for them. And there might be some tweaks coming that we can talk about later. Don't skimp on liability coverage. This is another one of my big takeaways other than paying your bills is please don't skimp on liability coverage, right? Property, is something that there's a lot of challenges right now, but liability coverage is still affordable. You can get the coverage you need at an affordable cost. And if you don't have that, you really can place the whole church and even the annual conference at risk if you're not buying the right liability coverage. Get a current property valuation. This can be an expense, right? It's not for everyone. But the value in doing that is you're going to insure your property correctly. And if you're deliberately underinsuring at the time of loss, you're not going to get the full amount of the claim, but it also reduces your desirability to other insurance companies. And so if they see a church that they think should be insured at $200 a square foot, and you're trying to tell them it's $100 a square foot, it's immediately going to get put to the bottom of the pile because they're going to think you don't value your insurance and you don't value the building itself. You're not upkeeping it. And lastly, explore valuation options. And this is something that, we can certainly talk about it in more detail, but, for larger churches, that, wouldn't rebuild the same building, right? There are other options out there. And again, we recommend getting as close to GCFA, recommendations as possible, but there is functional replacement cost and there is actual cash value, for churches who truly need it. And, I'll defer to Ron on, what that process would be, but some carriers do offer it. It's not as heavily available with church insurers as it is in other industries. A lot of the church insurance specialists that we've talked to about this seem to think that it opens them up to lawsuits at the time of claim. So it is an option. It's out there. It's certainly worth asking about and exploring. But I would be lying if I'd said it was kind of a one size fits all. For every church out there who's looking to not pay as much for insurance. And lastly, doing pretty good, guys. Only like a half hour. That's not too bad. Risk mitigation tips. So maintain your property and building systems as much as possible. And again, documenting all of this is extremely crucial to the insurance company. So your roof, when was your roof last updated? When was it last replaced? When was your heating and plumbing systems last worked on? Your electrical system, has it been looked at in the last 5 or 10 years? All these things go into kind of how we present your account to the insurance companies and the things that they look for. And if you can't do that, here are some other alternatives that, we've talked about with our clients and with our other conferences that we've spoken to is share space and costs with other Methodist churches, denominations, nonprofits. Alternative sources of revenue. GCFA has several great partners that can help. And Jeff Cook's been instrumental in kind of connecting other churches with the GCFA partners. And lastly, if it's possible, sell or downsize and find shared space. Jeff Cook always says, and I think it's great, is the church it's a community, right? It's made up of the people. It's not the building. And so, if you can, do more ministry by not paying an extra $40,000 a year for property insurance, and you can put that back into your ministry, obviously, that's something that we, as partners of the United Methodist, Church and GCFA, strongly believe in. So more or less, that's all I have. I'll turn it over kind of to you all if there are questions. I know Jeff's been monitoring the chat. So, Jeff, I guess I'll turn it over to you.
Yeah, thanks, Jeff. First question is actually for Ron. Ron, does Iowa Conference have a list of recommended carriers?
No, we don't.
Okay.
And if you guys would like to help me with that, I would love to put one together, but I don't have anything like that right now.
Sure. We can
Yeah,
help
we
you.
can do that. Yep.
Being an insurance guy and even being a United Methodist, I love to throw around acronyms. So we have a lot of folks who want to know what GCFA is. GCFA is the General Council on Finance and Administration of the United Methodist Church. The link I shared takes you to the GCFA website, and the GCFA website, as well as the United Methodist Insurance website, have access to the recommendations for insurance. And those recommendations now include functional replacement. And again, that's something that, as Jeff Evans said, definitely something you want to work through with your agent and your carrier. And also keep in mind that GCFA recommendations mandate that you get approval from your annual conference before you do that. So I've just one more word about the minimums. We recommend that you get as close to them as possible. 5 or 6 years ago, that was a slam dunk, as Jeff will tell you. And now it's becoming increasingly difficult. So if you do have to skimp, we have recommendation that you do your best to minimize your property coverage rather than your liability. Jeff, we have a question around valuing stained glass windows. If you have a stained glass window that's valued at $6 million, would you recommend insuring it for $2 million to save money? And I think you might have addressed this in one of your shopping tips.
Yeah, it is. I mean, if you have an appraisal for the stained glass, and that's always helpful. The insurance company is going to dictate some of what you are and are not able to insure it for. But a lot of the $6 million of stained glass, I'm assuming that's pretty ornate. And a lot of the insurance companies would straight up tell you that replacement cost coverage is based on like, kind, and quality. And that type of stained glass cannot be replaced to like, kind, and quality. And so, they basically tell you, we'll do our best, but the odds are of actually getting $6 million for stained glass, and that might be 50 to 100 years old, could be pretty difficult. So I think it's a worthwhile conversation, but there's not necessarily a blanket answer that I would say is, the right way to do it. But it certainly is something that's worth exploring.
Mm-hmm. And do you know a list of companies that offer functional replacement, or is that something that you just have to inquire about?
Yeah, it's a little bit of a cop out, but it is kind of a case by case. I mean, everyone in theory, most of the insurance companies are filed for it. Does that mean that they want to offer it? It is on a case by case basis, depending on location, age of the building, size of the building, loss history. There's a number of factors, but most of them are filed to do it because it is a filing. You can't just change your forms. You do have to file for it.
And we do have some questions around valuation. How does one go about finding out what a reasonable cost per square footage in their area is? And how do you find how do you find an appraiser?
So appraiser, I would probably defer. I don't know if GCFA or maybe the annual conference Ron has any connections there. And we don't have like an appraisal company that we generally work with. But in terms of benchmarking, your cost per square foot, I would say rely on your broker. We have a huge internal benchmarking database that we use that says, if you're masonry non-combustible construction built in the last 50 years, here's around where it should be. If you're frame construction and you're 100 years old, here's probably where you should be. I mean, if you're looking for a ballpark number, most insurance companies will say a minimum, even for, frame construction, in a rural area, minimum $180 a square foot. Obviously, it's a little different. You start talking about pavilions and warehouses and things, but for, a church building, they would say at least a minimum of 180 per square foot. And again, if you reach out to us, we can have those conversations with you, or your broker can have those conversations with you. We're not appraisers, we're not going to tell you this is what it should be, but we'll give you an idea of what we think it might be, and then we'll talk to the insurance companies, and they have their own internal databases too, where they have replacement cost estimators, cost guides, things like that to kind of run it through and see what other of their clients in the area are being insured at. So it's kind of a all hands on deck. Again, without a true appraisal, there's no, I guess, right answer, but working with the right people, you can get a pretty good idea of where you should be.
Yeah, and in response to one of the questions, I'll see if someone has a vetted list of appraisers in Iowa, and we can share that when we send out the email to all the participants.
Yeah, that'd
Um,
be super helpful.
got a question around coinsurance for you, Jeff. I know 80% pretty much an industry benchmark. Do you see, um, so I would imagine that 100% coinsurance is not very common, is it?
It can be. It's not definitely not as frequent. I do see the question is agreed value endorsement available, and there are definitely carriers that are offering agreed value still. It's not completely off the table, but I do think it's becoming harder and harder to come by. Again, not to beat a dead horse, but 5, 6 years ago, it was included in every quote from all of the main church insurers. You weren't even considered if you couldn't do it, and unfortunately, the lack of profitability, the carriers kind of have gained leverage because there are so few, church markets willing to provide new quotes. Now, if you have, a policy that's been enforced for 10, 15 years, there's a good chance you probably still have it, but that's a conversation you should definitely be having with your broker is, do I have coinsurance on my policy? If so, how am I impacted at the time of claim?
Mhm. And I think if I understand the question correctly, what's the advantage and disadvantage of paying minor property claims within your deductible out of pocket rather than filing them?
Yep, that's a great question. That's one we tell all of our clients like talk to us before you file a claim. That's our job. We're not technically consultants, but we want to be kind of consultative in that process. And I think it comes down to human nature, right? I mean, if you have a $2,500 deductible or a $5,000 deductible, and you put in a claim for, let's say, $5,100, and the carrier's they'll pay it, right? They'll pay out whatever they have to, and your account's still profitable. They're still making money on your account. That claim didn't, ding you to the point of the carrier wanting to non-renew you. But at the end of the day, the carrier's going to look at it and say, "Oh, they filed 3 claims in the last 4 years." At a certain point, carriers think that frequency eventually leads to severity. And so, whether or not that's right or not, I don't know, but human nature, these underwriters are people. And if they see more claims, they are more likely to either hit that non-renew button or, hit you with a large increase because claims, whether or not they actually affect the profitability of the account, do matter to, the carriers. And so we tell our clients, again, every situation is different. Every church has different budget and, different, means, but if you can pay the smaller ones, and handle it in-house, it does, in the long run, really help from an insurance perspective.
And I would always caution anytime you have something where you might have some hidden damage, like in leaks and so on. It's best to really know what you're into before you decide to take that on yourself, because you may run into trouble with late reporting. Can you say a word about how coinsurance works, Jeff?
Yeah, so it's basically so agreed value is the opposite of coinsurance. When you have agreed value, it's the church and the carrier basically agreeing that we're insuring our buildings to value to the best of our knowledge, right? No one's an appraiser, but you're saying that we all agree that the values on the policy are to the best of our knowledge adequate. And so they're not going to ding you at the time of claim and say, oh, you only insured the building for 75% of what it should have been insured for. So we're only going to pay 75% of the claim. And so when you have co-insurance, essentially it opens you up to that possibility. It's not a guarantee, but if let's say you mentioned 80% co-insurance, Jeff, that is the most common co-insurance. 80 or 90 are probably the two most common that we see. And so if you have 90% co-insurance, it means you're telling the insurance company and the insurance company is agreeing, we're insuring the building for 90% of the overall value. And if you are, then you're fine at the time of claim. But if at the time of claim, they think that you're not insuring the building for 90% of value, then they could ding you and say, hey, we're only going to pay a portion of this claim. And so it essentially all circles back to that, discussion point on, building valuation and, the importance of doing that because, agreed value is a lot harder to come by nowadays.
Mhm. And we do have a question around group insurance and whether
Yes.
churches pull together. And I can tell you that we have a number of conferences in the Methodist Church that do that currently. And Sovereign has experience with a number of other denominations that have done just that. And if you're interested in seeing how that might work for Iowa, I would recommend that you reach out to Ron and let him know that you're interested in it, and he'll collect information and send it over to Jeff Evans, and we can evaluate how that might work in Iowa. Jeff, you need around how many churches to put together a group program?
Probably 45 to 50 as a starting point,
Mhm.
at least as like an interested party, right? Obviously, putting together a group program, it might not work for everyone, but just to kind of kick off things with insurance companies and get their attention and kind of start that process, I would say about 45 to 50.
Good.
But yeah, that's something Ron and I have discussed that, and it's
Mhm.
something that, obviously, um, would probably be helpful. We're in favor of it, when possible, because, it's like the Costco method of buying, right? Buying in bulk leads to better outcomes for everyone. So we realize there is a real issue here. And so if it can be a real solution, we're more than happy to chase it down.
Yep. And buying insurance in bulk doesn't affect your waistline. You gotta have some humor around insurance, right? I don't know if that landed or not, but I liked it.
You always
Um,
try your best. I do got to give you credit.
well, yeah, you throw enough spaghetti at the wall, something's gonna stick, right?
It's
Um,
not it's not for lack of effort. He's got the effort.
He does.
It's a good thing my wife's not on the video. Her eyes would be rolling. Yeah. Um,
I might disagree with that, but I'd like to see a reaction.
32 years, she's used to it. Um, Jeff, do you see any of this flattening out um, anytime soon?
um, yeah, I guess I like I don't think it's gonna perpetually continue to go like this.
Mhm.
But I also think it's unrealistic to think that it's ever going to go back to the way it was before. And I think there's, probably a happy medium, at some point, hopefully in the next, maybe 2 to 3 years, where a couple more insurance companies start to get aggressive again and willing to take on new risk, right? I mean, that's kind of the biggest problem we have right now in the state of Iowa is that there aren't that many church insurers who want to take on new risk. And if they do, the amount they're charging is so much more exorbitant than what you were paying before that it's a drastic hit to your budget. And I think that there's a way to write insurance profitably between those 2 points of, where the church mutuals and the brotherhoods and guide ones were 3 years ago and some of what we're seeing right now in the market that, honestly, it just seems unsustainable.
We did
Was
have
that
a
a cop out
question.
of an answer?
Well, I, you if you had that kind of ability to predict what was going to happen in the future, you'd be I'd be playing golf somewhere.
Yeah.
Um, but there was a question around filed rates and how what is the limit in Iowa if a church can get a 50% increase? Um, and I guess it's fair to say, Jeff, that would really depend on where you are currently with your rate, where their rate limits are, and what they feel it would take to make you a profitable risk. And
Exactly. And the other thing that can be factored in there, and we've seen carriers do that when they, quote unquote, can't get enough rate, is what they'll do is they'll increase your building value. And so the rate itself is actually not changing, right? Your property rate cost to replace per $1,000 of value is not changing, but the actual value of the building is changing, which is in theory driving up your premium. So they're making the argument that you are getting more insurance, even though, you didn't ask for it and you're paying more money.
Mhm. We have a question around finding companies and brokers that insure churches, and how do you go about that? And I think, on a self-serving note, we picked Sovereign for a reason, but we went through a process of asking some of the national uh, brokers that handle churches the same questions you would ask your agent. The first would be, how many churches do you insure? The second question would be, how many of those churches still like you? Uh, the third question would be, how many carriers do you represent that are willing to write churches? And I think those are the key issues that you want to resolve. You really, in a market like this, an agent might be well versed in a wide variety of different risks or have a niche that isn't related to uh, your ministry. But those are the questions I would ask. Do you insure churches? Do you get good recommendations from them? And do you have a sufficient number of carriers in a market like this where, you can land a good risk for us? And I know we have instances on some difficult, challenging risks where, we've gotten 39 no's and one yes on placing coverage for a church. So I think that's a critical issue, especially in a tough market. You really want someone who understands your ministry and has the resources to help you out in this market. I think we've cleared all of the questions. So unless Ron, you have any questions for us, or anyone else wants to put one in the chat, you will get a follow-up email that will have my contact information and Jeff Evans' contact information. So if you're like me and you listen to something for 30 or 40 minutes and um, you wake up the next morning with a question you wish you had asked, we'll be here. We did get one more asking to explain the role of United Methodist Insurance. We are rooted in the Book of Discipline. The General Counsel on Finance and Administration is mandated to create a program that makes insurance available to all the ministries of the United Methodist Church. We fulfill that mandate in our relationship with our exclusive endorsed agent, the Sovereign Insurance Group. So when you come through the United Methodist Insurance Program, you're gaining access to a large number of carriers that insure churches through an organization that's been vetted through the General Counsel on Finance and Administration. And I actually, I'm president and CEO of United Methodist Insurance. I'm also the only employee of United Methodist Insurance, but I do in fact work for the church. I hope that, yeah, we will have the links, and I can put those out there now. And it's Jay Evans, right, Jeff?
Mm-hmm. Yep.
So we are always available. We do have one more question. I don't think that the links talk about functional replacement. Functional replacement means we wouldn't rebuild our $5 million church if something happened, but we would build a functional building for $100,000 to worship in. That's broadly correct.
Mm-hmm.
Obviously, when you when you get into functional replacement, I think it's really good that you have a clear idea of what you would and would not do. And I would not go into that without some serious study of an accurate cost of what it would take to replace what you're doing. But yeah, that's broadly correct. And I think Brandy Bivens, our GCFA's Chief Communications Officer, did put a link into the article we did on functional replacement and different valuation methods. You have my email, you have Jeff's email. Feel free to drop either one of us a note if you want to get into more specifics.
Thank you, gentlemen. Appreciate your time tonight. I look forward to working with you in the future as we continue to deal with issues the churches face. And your expertise is greatly appreciated and saved me having individual conversations with about 90 people, it looked like at one time. So I do thank you for doing it like this.
Oh,
Thank you.
absolutely. We appreciate everyone taking time to talk about insurance for an hour on a Monday night.
Yeah. Yep. We're happy to have the opportunity to be of service.
Absolutely.
Yep.
Well, thank you again, and I look forward to future conversations with you all and anyone else who may have a question. My email's out there, ron.carlson@iaumc.org. And we will talk with everyone soon. So thank you and have a good day.